Good afternoon, distinguished guests, ladies and gentlemen. Business is continuing now, and we have some more people to present their papers. So I'm introducing Mr. Dominic Osumu, who is to be presiding over a paper which is coming now on indispensable role of insurance broker in insurance distribution chain. Mr. Dominic Osumu is a fellow and chartered insurance broker of the Chartered Insurance Institute of London with over 30 years experience in the insurance industry. He has an exposure in multinational insurers as an underwriter of global specialty programs. He later joined then Alexander Forbes, which later was rechristened to African Risk and Insurance Services, ARIS, the leading insurance broker in the country. He heads ARIS as its group managing director, leading the operations in Tanzania, Kenya, Uganda, and the United Kingdom. ARIS has achieved much under his leadership. So ARIS is the only certified chartered insurance broker in Africa. The charter is awarded by the Chartered Insurance Institute of London. And also, they are also the only Lloyd's brokers of London. And they've been chair of the technical committee of Tanzania Insurance Brokers Association. I think in 2015, they could have been also doing some facilitation of the National Economic Empowerment Council like that. Yeah, I think they've forgotten to put down here. So they are also in that other category of their, position in the market as well. So, Mr. Dominic Osumu, please, to the floor.
Good afternoon, everyone. Doing something in the afternoon is not the easiest after people have had sumptuous lunch, but I do hope Mr. Udai, who is going to do this paper, will be able to keep everyone awake. He's not wearing a t-shirt, and in the morning, I leave it to you? Okay, I leave that one to you, but only one I will mention. In the morning, someone was asking him, your wife has been appointed minister in the UK? I didn't get this answer. Preet Patel, yeah. So I didn't initially know. He's yet to confirm whether it's the wife or someone else. If that's the case, then we have a dignitary here. We may have a link there. Anyway, I want to introduce Mr. Udai Patel, who is not a new name in our industry. He's a fellow of the Association of the Chartered Certified Accountant, an associate of the Chartered Insurance Institute of London. His personal profile includes insurance and reinsurance practicing since 1988. And he holds directorships in a number of entities. He's the MD of Afro-Asian Insurance Services Limited, who is a Lloyd's broker in the UK. He is also director of Afro-Asian Reinsurance Brokers Limited, Zimbabwe. Afro-Asian. Thank you. Afro-Asian Reinsurance Brokers Limited, Ghana. Afro-Asian Insurance Brokers India Private Limited. London School of Insurance UK Limited. He has done a lot of presentations in a number of fora, which include AIO, OEASI, and WAICA. And he does quite a bit of professional trade press. He's married and has 2 children living in the UK. So he's going to tell us whether he's the minister, and then we'll start being even closer to him. That's what happens. Yeah. So he's going to do a paper, and Mr. Udai, if you can please come across, and then from there we'll carry forward the rest of the discussion. We do believe, Mr. MC, we have more time now since we sacrificed our time in the morning. If we keep everyone awake, then just let us go on. Thank you.
This group, I monitor. I have the capacity. Okay, Udai, please.
Thank you, sir. Good afternoon, all. I hope you can hear me. Let me first correct one misconception. The newly appointed Home Minister in the UK is not my wife, and I wouldn't want her to be my wife. Honorable Commissioner of Insurance, Dr. Musa Juma, President of TIBA, Chairman of this session, colleagues, distinguished ladies and gentlemen. It was exactly 21 years ago when my late father, Mr. Rasik Patel, in his capacity as past president of the Insurance Institute of Tanzania, stood at a similar podium in Dar es Salaam and spoke about the role of an insurance broker in an open insurance marketplace. Now, if you will note, I'm of the old school. I don't have PowerPoint. I'm going to read this, and then I have given a copy to the organizers to circulate to all of you, so you can go away and study it at leisure, because there are quite a few concepts in my paper. And we've all had lunch, so I don't want you all falling asleep either. Whilst the general description of an insurance broker's role may not have changed over the past 2 decades, I would suggest that the role has definitely enhanced. And in this paper, I intend to explore this further. Whenever I refer to insurance broking, my comments are equally applicable to reinsurance broking. The generally accepted role of the insurance broker is to solicit, negotiate, advise, and bind insurance and reinsurance contracts. The positive contributions that insurance brokers make to the insurance marketplace include innovative marketing, whereby intermediaries bring innovative marketing practices to the insurance marketplace, which deepens and broadens these markets by increasing consumers' awareness of the protections offered by insurers, their awareness of the multitude of insurance options, and their understanding as to how to purchase the insurance they need. Secondly, dissemination of information to consumers, where insurance intermediaries provide customers with the necessary information required to make educated purchases and informed decisions. They can explain what a consumer needs and what the options are in terms of insurers, policies, and prices. Faced with a knowledgeable client base that has multiple choices, insurers will offer policies that fit their customers' needs at competitive prices. I'm now talking theory at the moment. Thirdly, dissemination of information to the marketplace, where insurance intermediaries gather and evaluate information regarding placements, premiums, and claims experience. When such knowledge is combined with an intermediary's understanding of the needs of its clients, the intermediary is well positioned to encourage and assist in the development of new and innovative insurance products and to create markets where none have existed. Furthermore, sound competition, where increased consumer knowledge ultimately helps increase the demand for insurance and improve insurance take-up rates. Increased utilization of insurance allows producers of goods and services to make the most of their risk management budgets and take advantage of a more competitive financial climate, boosting economic growth. The next positive contribution is spread the insurer's risk. The quality of business is important to all insurers for a number of reasons, including profitability, regulatory compliance, and ultimately financial survival. Insurance companies need to make sure the risks they cover are insurable and spread these risks appropriately so that they are not susceptible to catastrophic losses. Insurance brokers help insurers in the difficult task of spreading the risks in their portfolios by working with multiple insurers and by showing them diverse risks, which are spread according to industry, geography, volume, line of insurance, and size. This helps insurers from becoming overexposed in a particular region or a particular type of risk, thus freeing precious resources to use elsewhere. And finally, reducing costs. By introducing an element of competition among insurers for the ultimate benefit of the customer, insurance brokers achieve reductions in insurance costs. This has a consequent impact on the general local economy through product competition, price competition, and improved services. More importantly, the value that an insurance broker brings to the insurance distribution chain includes, firstly, the reduction of search costs to the insurance buyers looking for the right coverage and the right insurer for their risks, and the reduction of sales and marketing costs to insurance companies in search of insurance buyers. Secondly, removal of uncertainty in the insurance distribution chain. Insurance purchasers and companies do not have all the information relevant to the placement of a policy, which makes it difficult to negotiate a fair price and the proper terms and conditions of a policy. Purchasers know the risks in need of coverage, but may not know the financial health of the insurer or the prevailing conditions of the insurance market. Insurers, on the other hand, may have all the company and market financial information necessary to make a decision, but are not in a position to know enough about the risk and the prospective client. Insurance brokers know the insurance marketplace. They solicit and provide information on insurance purchasers and companies, and they make the information more easily understood to both parties to a transaction. Thirdly, the provision of experience and expertise to the insurance marketplace, using the insurance broker's knowledge of the insurance markets, their familiarity with their clients and clients' risks, and their access to insurers forged through long-term relationships to sell and service insurance coverage for costly and, in most cases, unique risks. Commercial insurance clients are generally professional risk managers. As sophisticated insurance purchasers, they realize that commercial insurance products are not commodities. Rather, they are customized risk transfer tools, the price and terms of which are generally negotiated on a case-by-case basis. Placement of such risks can be a long and difficult process. Sophisticated commercial purchasers rely on their intermediary to fully understand and appreciate their insurance coverage and to find the coverages suited to address those needs. The last point again, representing clients in all phases of the risk management process by helping clients evaluate risk exposures, implementing measures to minimize such exposures, identifying and facilitating the purchase of insurance products or risk management systems best suited to a client's insurance needs, and managing the claims process. A progressive insurance broker will, as part of the risk management process, also advise on non-traditional risk transfer and mitigation solutions, such as self-insurance, for example, in the form of policyholders assuming higher deductibles, forming a captive insurance company, or setting up reserves or a sinking fund to self-administer and pay the client's own losses. However, the insurance distribution chain is going through a major evolution. Insurance intermediaries need to claim their place in this evolutionary process, or else they risk becoming obsolete. Some say that we are poised at the beginning of a fourth industrial revolution, which is characterized by the convergence of technologies blurring the lines between the physical, digital, and biological spheres. Its impact is being felt throughout the insurance industry. For example, auto insurers are using telematics to capture data on driving habits in order to better manage risks and set rates. Furthermore, both property and casualty and life insurers are starting to employ virtual assistants to enhance customer service and help customers select the right coverage. For example, Allianz, they have a virtual online assistant called Ali that is available 24/7 to answer questions about insurance products. I was just saying over lunch, giving an example of such a service where when President of TIBA rang me and, oh, sorry, thank you. When President of TIBA rang me and said, can you sit in and basically chair the session on bancassurance. Of course, at that time, just before my trip, I didn't know much about bancassurance, so I started looking at the web to see what there was about bancassurance. And there was a site which purported to give technical information of what bancassurance is, etc. What I didn't know is that website was sponsored by an insurer. So the moment I got on the website, a virtual assistant popped up, which was a cartoon caricature of a lady, and they had picked the first part of my email address, and it said, "Hi Uday, can I help you calculate your insurance premium?" Now, how's that? That's technology, 21st century in action. Two key themes are essential to understanding the fourth industrial revolution. One, democratization of work, where companies have the ability to deconstruct a job and have component tasks completed anywhere in the world faster, better, and cheaper than ever before contemplated. In turn, this trend is leading to new work relationships that are stronger in duration with a greater equality of power between employers and talent. And secondly, technological empowerment, where innovations such as machine learning, 3D printing, mobile technology, and algorithm analytics are transforming work and both replacing and augmenting human capacity. A 2015 survey report published by Accenture on the subject of reimagining insurance distribution looked at a variety of disruptive trends in insurance distribution. Arguably, the most disruptive trend was what they called Internet of Things, or IoT, which not only enables insurers to better understand their customers and improve their interactions with them, it is also driving the expansion of insurance beyond indemnification to real-time protection. The survey found that the application of disruptive new technology and processes by insurers is creating a significant shift from the traditional single interaction channel, where the customer experience was often outsourced to the agent or insurance broker, to an omni-channel where the insurer creates customer-centric hubs which provide seamless and responsive customer experience across all channels. The 2015 survey report further concludes that the insurance broker's or agent's role is therefore changing, where they have to add value in an omni-channel environment. In this new environment, for example, insurers want the intermediaries to increase their cross-selling and sell more profitable products. They also place a high value on intermediaries improving their advisory skills regard to complex products and enhancing their sales interaction with customers based across multiple channels. A recent research paper produced by PwC has looked at the changing role of insurance brokers in a globalized economic environment, where supply chains are becoming ever more diffused and vulnerable. Growing reliance on technology is introducing an array of new and escalating risks in areas ranging from cyber attack to nanotechnology. Given the potential for sharply rising losses and ever more complex loss drivers, the PwC report suggests that the evolving risk environment can no longer be managed solely through traditional approaches. Solving these complex and dangerous challenges requires a comprehensive risk facilitation leader to educate, promote, and coordinate solutions across a range of stakeholders, including corporations, insurance and reinsurance companies, capital markets, and policymakers worldwide. So what are the implications for brokers? As the traditional intermediary in the risk transfer chain, insurance brokers are ideally placed to identify and develop viable and innovative solutions to the changing risk environment. There are a number of ways that brokers can ensure they stay on top of the frantic pace of change in this new era of risk. Namely, 1, adapt business and operating models to simultaneously support both cost-efficient standard risk management and a knowledge-intensive consultative interaction with clients. 2, expand their information gathering network to better anticipate and understand the new and emerging risk facing their clients. 3, improve their ability to collect, integrate, analyze, and communicate data to create actionable insights. In other words, shift to becoming more of an analytical and consultative broker. There's an increasing demand of the broker as a business partner. Risk managers take the placement function as a given. Most want analytics to help them make informed decisions concerning new and emerging risks. Today's insurance brokers therefore need to invest in their own analytical and modeling capabilities to assist the risk manager. The PwC survey interestingly concluded that the same risk managers do not always see the broker as the primary source of solutions for their risk concerns. This is especially the case in receipt of cyber and supply chain risks, where the risk carriers and industry groups are ahead of the broker as the primary source of solutions. The PwC survey concluded that risk managers were very satisfied. These are the sectors or the segments in which they did their study. So they found that they were very satisfied with brokers' services relating to placement and CAT modeling, which was one sector. They were moderately satisfied with services relating to geographical risk concentration, predictive modeling, and risk-adjusted pricing benchmarks. That was a second sector. And they were very dissatisfied with the services delivered on captive capital and collateral benchmarks, enterprise risk or business risk simulations, and remote CAT evaluation services. Now, this was the third sector. So this clearly highlights the areas of business opportunity for progressive insurance brokers who wish to enhance their role in the insurance distribution channel. Big data and advanced analytics are going to be crucial in managing emerging risk landscapes and strengthening brokers' position as the primary source of risk solutions. These capabilities open up opportunities to identify, anticipate, quantify, and price a wide variety of risks. At the heart of these analytical developments is the shift from hindsight to foresight as brokers continue to evolve from being simply placers of coverage to being preventative risk advisors and managers. These more advanced capabilities can be monetized as a complement to advisory services. Other opportunities include the development of risk information services that can be accessed by either corporations or capital market participants. The hedge funds investing in insurance I will be 3 minutes. The hedge funds investing in insurance-linked securities. Yeah, I should have left my spectacles at home, then I wouldn't be able to read this. Anyway, the hedge funds investing in insurance-linked securities, or ILS, are an example of potential users of these services. Such capabilities require huge financial investment by the insurance broker, which the smaller brokers may lack. Therefore, there is scope for pooling of resources and finding ways to access market-wide information services. In this collaborative process, it is important for brokers to forge close relations with a broader set of stakeholders that includes governments, academia, specialist risk consultants, and even their industry peers. work together basically. The ability to identify and collaborate with a diverse set of partners is going to become a core competency for risk facilitation leaders. In this respect, it is also going to be important to develop shared databases and research capabilities. The value of the new brokerage model is highlighted by the recent phenomena of cyber risk and nanotechnology. The new breed of analytical brokers have shifted their mindset from we have a policy to we understand the dynamics of your business and market and can help you develop the solutions. There's a subtle difference. With both risk types, the analytical brokers will need to spend more time and resources in creating risk inventories on intruders in the case of cyber, or on exposures to various nanoproducts. They're best placed to accumulate and rank such exposures and then to share the information by distributing it to companies at risks and to insurers. Depending on how much information is received, risk management alternatives can be identified and explored, including potential capital market solutions. There are 5 key questions brokers will need to address if they are to make the most of the opportunities in this evolving marketplace. Number 1, do you have clear enough insight into the rapidly shifting risk and pressures facing your clients? Number 2, do you have the expertise to turn advanced analytics into actionable solutions? Number 3, are you doing enough to bring together and make the most of the information, expertise, and talent available to you within your organization and among your partners and stakeholders? Number 4, do you have the operational efficiency and flexibility to respond to clients' changing channel and engagement choices in a sufficiently fast and economic way? And number 5, do you have the confidence of your clients, risk transfer partners, and other key stakeholders needed to lead effective risk facilitation? I am concluding now. The brokers at the front of addressing these challenges and capitalizing on the unfolding opportunities will have the incisive yet highly practical analytics ability to anticipate emerging risks, capacity for innovation, and inspirational leadership needed to create effective and economic risk management solutions. The results will provide a powerful boost for a sector facing disruptive competition and shifts in customer expectations. I'm coming to the end of my presentation, but the clear message I wish to leave you all with is, whilst the insurance broker has a role to play in the insurance distribution channel, the time has come for us to redefine this role, and our success on this change will determine whether we remain indispensable. Thank you for your attention.
Thank you very much, Uda Patel. And now it's time for you, Dominic, to do a brief discussion on the paper.
Thank you, Uday. Congratulations.
Tell him to be kind.
You didn't talk about your T-shirt.
No. There were too many challenges.
He couldn't wear a T-shirt. He says it was up to here, so it was disclosing a lot of assets.
No.
It's
a fashion statement. It's up to here.
I told him, my daughter, if I'm not wrong, had told me it's called Tumbo Cat. So it would have been a fashion and it would have been something different for us today. So next time you wear it, maybe tomorrow. Thank you very much. I will just do a quick recap. I think it's a very important topic. It's just sort of like putting us in a point where we question whether we are relevant or not, or whether we are indispensable. I think there are key points there, but my personal opinion is we have to be very careful not to move towards a situation where the whole of our lives, we spend a lot of time worrying about dying, spending a lot of money keeping ourselves safe until we die, and then it happens, everyone cries. Question is, the person who is dead, is he crying or happy? Maybe life the other side is better than the life that we have here now. So if you look at what has happened in this market, when there was liberalization of the market, I do remember there was a lot of predictions about new insurance companies undercutting and they will collapse. One collapsed, but it was not because of undercutting. And then other changes came in. There was a lot of worry, and personally I would say 2016, 2017 was very worrying. But we have seen it. This is 2018, we are still, 2019, we are alive, and I think there are indications that maybe things will move better. The regulations that, which have come up, some of them we worried, VAT and all that, yes, they've reduced the business, but we have not collapsed. 21 brokers are not with us here. Question is why? Was it competition? Was it lack of governance? Was it lack of business? We need to know. Maybe they will have still have gone if things didn't change. So I think let's have a positive view and keep doing the right thing, and then we try to see this technology. In any case, I don't think our technology is advanced enough to threaten us to the extent that all of us will be very sad all the way. Let me recap the paper very quickly, key areas or points before maybe we invite questions. Now, the innovation bit is very important, and I think we need to discuss it. We should not focus on innovation being just technology, because most of the technology so far is about delivery. How about claims? Are we in a situation where all claims will be, you click, premium payment, there's a claim, you click, your claim is paid? No. Still will be required to support the claim settlement, and that part is our strength. We will still be there, I believe. So the Libras and so on will face the same challenges. Bank assurance has come in, which has somehow has been there anyway. My personal view is it's going to, in the short term, it's going to be a challenge because in the first 3 years, the same business in the market is going to run around to the bankers, back, and so on. After that, everyone else will face the same challenge, and possibly that's where we reclaim the space. So just as timing and how we prepare ourselves for costs that will incur at that stage. So the 3 years are enough for us to adapt. Few points like the evolution that is developing and the need for us to claim the space and the internet. I think internet is something we can develop and we can catch up. Claiming the space involves a lot of other factors, client service and so on. And recognizing the change in the role, because even if we have, for example, accountants, now you can have packages, you can work for yourself, all the accounts, but I don't think people have stopped studying accounts. Same thing with the lawyers. In our own company, rarely do we consult lawyers, because you can get templates, tweak them here and there, have them looked at by a lawyer who charges a fraction instead of drafting from zero. So we will survive, in my view, so we need not really despair and then allow that change to swallow us because we have despaired and panicked. So with that, I think also you have seen the research has predicted the change, but it shows that we still have a role to play because clients want us to be partners. The problem we have is we look at how to get the business rather than on how to partner with the clients. A current trend which has happened recently since the new law was passed on minimum rates, we brokers started rebating commission as a way of winning business. So that's not changed. The law has changed. So do we change by taking away the little that remains? Then tomorrow we say we are out of business. So we need to understand that the competition has come in. If you are cutting your commission, you are actually cutting off part of yourself. And then eventually tomorrow, we will say there's undercutting, and we are glad the commission has issued this circular that is specifying rebate is illegal. But it's rampant. I've lost 2 clients because I couldn't give that. So, but I know sooner or later to catch up with everybody and will again cry. Is it that commission was too much and was attracting everybody, and therefore we think it's more we can give back to the client, and so on, other factors. Yeah, I've wrapped up. So maybe it's time to invite questions, and you can manage that.
Thank you very much. It's now time for questions. we'll have 2 questions this time. 2, or not more than 2 questions. Any questions on the paper presented by Uday Patel and discussed by Dominic Osumo?
Hi, Mr. Patel, thanks for the interesting presentation. But I would like to pose a question to the other colleague. Maybe if you can expound a little more on why you think the claims part of the insurance business cannot be simplified to the point where a customer can just click and funds appear in the account in any form, whether it's a bank account or mobile money. It's because, for example, in our startup, that's one part that we've been trying to find a solution, because there is a disconnect in the process of claims, and once that disconnect, which involves policy changes, etc., once that disconnect is removed, we believe that part can also be digitized and simplified to a very simple process. So maybe you can tell us more why you think that part cannot reach there as well.
Okay, and a question if there are any? Any other question, the last one? Okay, one question.
Thank you. I was interested to hear about ILS being mentioned. Now, I attended this conference, and I was the only African in Asia on ILS. And they were wondering, like, what is Africa doing here on the ILS space? But we have been doing something on that space. Now my question is, which I was asked by the president, what is the role of an insurance broker? And what is the opportunity of the insurance broker in the insurance-linked securities?
Okay, it's time for the panel to respond.
What's ILS? Sorry, I'm behind. Oh, sorry, okay. Can I answer the first one maybe? Yeah. Then we can proceed. Okay, I'm not saying that claims can't be automated, but we have a lot of time to see a threat, because for a while that will remain, and hopefully we'll be blessed enough to see how long that will take. The reason is that once, we talk a lot about these mobile telephone providers. We signed an agreement with the Zain before Airtel came in. Everything went smooth until the launch date, and 2 events occurred which killed everything in spite of agreements having been reached. The first problem was it was bought by somebody else who came in and said, I want 90% of the premium that is being collected. They didn't know something to do with commission and risk premium. The second one was on how to manage claims. The claims, everything would be done on the mobile phone by clicking buttons. But when the accident has occurred, you need to press a button and see your money coming by M-Pesa without anyone verifying. So we need a system of trust to develop enough where a stranger comes and writes you a check, and you trust that check, you go to the bank, you place the check in the bank, and you withdraw money. Banks now, they don't handle checks. They will sign new indemnities before they can pay a third party in your account. That means checks used to be trusted, they're no longer trusted. Now you have to sign with the bank that if that money is stolen by somebody else, the bank is not responsible. So what I'm simply saying is that the role of us being there to advise and support clients on claims, because most claims are fiscal. You have this building and partly it's damaged, and the insurer needs to know, is he indemnifying or is he simply paying an agreed value? What is that agreed value? You haven't seen it. Yeah, we are talking about, drones being used. But drones are technology. We haven't reached there. How many drones will we have? Do we have service for drones? You know the regulations now. These are flying, they're flying entities. So by the time that technology comes, I think we will all have adapted. So we have time. What I'm trying to say is we need not panic, but we need to move step by step. The story is not full of despair because we have areas we can hang on which people come to us for help. That's what I meant. But it can be digitized. Question is, we need to think through on how that measure of the claim will be worked out. If someone has died, maybe there will be means to know that someone has died and you send the money. But what happens when there is damage and that damage must be assessed? We must have the technology that will go there on its own as technology without human intervention, work out the calculation, send you the information, then you pay the premium. The claim.
Before I come to and address the question which was asked of me, can I just make one comment on the previous participant? The simple answer to you, sorry, can I ask you one question? Do you work for an insurance company? Sorry. You don't? You're an intermediary? Okay. The simple answer about digitizing claims is yes, anything can be digitized, okay? But in my view, digitizing claims of a class of insurance that is simple in terms of managing the claim is easy. It gets more complicated when there are several third parties who are going to be involved in a complex claim. Let's say, for example, a refinery explosion. You cannot digitize that. There are too many consultants, surveyors, and other experts who will be involved in it. You may even have legal services involved in it. So there are too many parties involved to automize that. So that was my only comment about digitization. But theoretically, you can digitize anything. You can even digitize a human being, theoretically. Okay? Coming to the question posed to me on ILS, and the gentleman has left. Is he? Okay. I'm coming to your question. So was this in New York? In Singapore, okay. The world's largest ILS conference was in New York, in about 5 feet of snow. And that was last year. Now, you know what ILS is, but for the rest of the audience who may not know, it stands for Insurance-Linked Securities. Now that is basically a pseudo-investment tool that is used for either solvency enhancement or capital enhancement. So what it is that effectively there are capacity providers out there who will set up alternative capital instruments, which is a conversation that I had earlier with the commissioner here, which will basically allow a company to increase its capital without making a traditional call on its shareholders or going out into the market when maybe that capacity is not available. Now, when it comes to your question of relevance to Africa, I think it is very relevant. I again was sharing over lunchtime that in a week's time, when I go back to London, we are hosting a conference where the topic is ART and ILS. And our guests are CEOs of insurance and reinsurance companies from Africa. Now, there are sophisticated buyers of such products in Africa, especially groups, financial groups, of which insurance is a part, who want to look at such instruments. But as with everything, there has to be a regulatory framework in place to allow it. And that is probably where the start has to happen in terms of, training the regulators in the benefits of it or what it is all about, and then going into the market and sharing that knowledge with others. And of course, convincing the capacity providers that Africa is where you should put your capital.
Thank you very much. Now, I would like to ask Mr. Bosco Bugali, President of IIT, to come and present awards to the panelists. I mean, the presenter as well as the discussant. Thank you. Dominic, it's your turn now. If you are non-Tanzanian, yes. Okay. Right, thank you very much. Yeah, so that was from the two. I really thank you for that.